Welcome to the Uzziah Show. I am your host, Uzziah, your success strategist. And if you have any questions about your business, career, or finances, then this is the show for you. Welcome. I'm so excited because tonight we're going to talk about how to invest your money. This is the long-awaited Investment 101 video. Make sure that you take good notes because once you walk away from tonight's broadcast, you're going to know exactly how to invest. Now, I want to tell you guys, a lot of you have questions on, should I invest in crypto? Should I invest in gold? Should I invest in real estate? All of that's going to be answered tonight. So make sure that you smash the like button and leave me a comment so that I know that you're here and I'll show you some love. Now, for those of you that are watching this broadcast for the very first time, my name is Uzziah. I'm a professional business consultant, and my job is to help you get out of debt so that you can start your own business. And since this channel is all about creating generational wealth, we also talk about things like how to invest your money. So tonight, we're going to talk about Investing 101, a step-by-step guide to help you get started. And one of the most important things that you need to know about investing is, even though you may be starting a business, you'll want to take some of the proceeds from your income and put it towards investing. Don't think that your business could be around forever. It's important to preserve the wealth once you've created it. So let's talk about how to invest your money. Now, guys, y'all know I can't get into this topic without giving off my legal disclaimer. I am not a licensed investment advisor. The information that I'm going to give to you is purely educational. I do a show, which means that this is a entertainment broadcast just to help you get to the next level. So if you're interested in leveling up and you're interested in being able to create wealth long term, then tap into the Uzziah Show. All right. So just wanted to get that out the way. Now let's get into tonight's broadcast. Make sure for those of y'all that are just getting on, make sure that y'all leave me some comments. I need to get some feedback from y'all. Y'all know I don't like this. We don't do those type of shows over here. We do the shows where people interact, where they engage. Okay, that's what we are doing over here, y'all. So listen, let's get into the topic. Tonight, we are going to talk about how to invest your money, but the way that you invest your money is by going through what I will call the who, what, why, when, where, how process. You need to be able to get down your who, what, when, where, why, how in order to understand how to invest your money. So the first question that I'm going to ask you guys is, why are you investing? You know, a lot of people say, well, I want to invest my money, but they don't have any specific goals. You need to figure out, why are you investing your money in the first place? Is it so that you could make money right now? Is it so that you could create generational wealth in the future? Is it so that way you can save for your retirement? What is it that you're trying to do? The reason why you need to answer this question out front is because that will influence your investment strategy. Guys, everybody goes about investing a little bit differently. So this isn't a one size fits all plan for everybody. If I got on here and I told a 20-year-old to invest just like a 60-year-old, that's foolish because they're at two totally different places in life. I'm giving you guys a custom roadmap for you to invest your money that works in a way that's best for you and your personal life. That's why we're starting with the question of why are you investing? So I want y'all to leave a comment. The more interactive that you can be on tonight's broadcast, the more you're actually going to help yourself create wealth. If all you're doing is just kind of listening in the background and you got a million other things going on, you might be doing yourself a disservice. You need to understand why you're trying to invest. Are you looking for long-term money, short-term money, retirement money? That's what's first. And you need to identify your goals and objectives. Listen, guys, don't just start off by saying, I want to invest. Instead, you need to say, I want to invest so that I can, and then you give your answer. So, for example, I want to invest so that I can pay my children's college fund. I want to invest so that I can make my money work for me. I want to invest so that I can retire comfortably. Once you can give a definitive answer on why you're investing your money, that's going to figure out your investment strategy. Okay. So, for a lot of you guys that are just looking for quick, fast money, then some of you guys might hop more into day trading. You need an immediate return. For some of you guys that are more focused on retirement, you're going to structure your investments into specific retirement accounts. Your outcomes will dictate your investment strategy. So make sure that you take that down first. The second thing that I need you guys to realize is what matters in investing. You know, there's so many people that say to themselves, well, I just want to invest because I want to make money. And a lot of people only focus on the ROI, but they don't focus on everything else that goes into the world of investing. Guys, when I first started investing my money, I really knew nothing about it. I just thought that everybody who's going to be successful has to invest on some level. So I might as well get started. And I'm sharing with you guys all of the years of experience that I have as a stock investor, as a real estate investor, as a crypto investor, and as an entrepreneur, showing you guys the type of thoughts that you need to have at the outset. I would have killed for somebody to walk me through this process before I got started because putting your money in random places never guarantees a win. Whenever you invest, there's no guarantee for anything. There's always a level of risk, but you can reduce the risk and think through better outcomes if you know how to invest properly. So, the first thing that I really want you guys to understand about investing is that investing isn't just about a return on investment. Obviously, the big picture is about how much money you make, but there are also other factors that are included. For example, you need to think about the tax benefits. You need to think about the expenses and fees that are associated with your investment accounts. You need to think about what are the penalties that are associated with your investments. A lot of people only think about making money, but you never think about how that money can be taken away from you if you did not invest into the right investment account. So let me give you guys an example. There's so many of you guys that talk all day about investing in real estate, but most people that build wealth have built wealth traditionally through the stock market, right? The stock market, as well as real estate, have made the majority of millionaires in America today. And one of the best ways to invest in the stock market comes through retirement accounts. The reason why the retirement accounts are so valuable is because they give you the best tax benefits. When I'm talking about retirement accounts, I'm talking about a 401k and an IRA. A 401k is something that you get at your job. Your IRA is called an investment retirement account. This is something that you set up independent of your job. Now, you still can set up a 401k even without a 9 to 5. They do have solo 401k plans available. But the reason why I'm walking you through this right now is because I'm trying to show you guys that if you have a retirement account where you do stock investing, and you have a non-retirement account where you do stock investing, you might make the same amount of money if you have the same investments, but in the retirement accounts, you'll walk away with more. The reason why is because you're going to pay less in fees. These accounts give you better tax benefits. So it's not enough to just think about the return on your investment. You need to think about what is the net return rather than the gross, because every investment comes with taxes. Guys, why do you think the wealthiest people in the world are always trying to avoid taxes? The reason why they avoid taxes is because they know that's how people go broke. They understand if they're not focusing on limiting their tax burden, they're not going to make a lot of money. Okay, y'all, when y'all work at y'all's jobs, right? Shout out to everybody that's in the house, by the way. Shout out to Ariel. Shout out to Carrie. If you're just coming on, smash the like button, okay? For those of y'all that have actually watched your paychecks as they come in the mail or direct deposit, however you get them, you'll notice that before you get paid, your money goes to taxes. It goes to Social Security tax, Medicare tax. It goes to all of these different taxes before it goes into your bank account. And many of us don't understand that our employment income is one of the most taxable forms of income in the world. When you look at Donald Trump, Amazon, all of these guys that are making billions of dollars, they're always focusing on reducing their tax burden. It's not enough that they just make the money. They want to make the money and then keep the money after they get it, because it's not about how much money you make. It's about how much money you keep. You can make money in the stock market, but there's some methods that are better than others to determine how much of that money you'll actually be able to keep. So if you want to make wise investments and not have to give it all away to taxes and other hidden fees, you need to tune into this broadcast, because I'm not only going to give you a free game on the best kinds of investments to make, I'm also going to show you how to maintain your money once you've gotten it, okay? Because a lot of people, they just rush into any investment and they never think about how much the investment cost. Most people don't understand that you could end up spending tens to hundreds of thousands of dollars into certain investment accounts over time if you're not being mindful of fees, okay? So the second thing that matters is you got to think about what matters in investing. The second thing that you want to think about when it comes to investing 101 and getting started is what matters. ROI matters, how much money you make, your tax benefits and your expenses and fees. It's not about how much money you make, it's about how much money you keep. And guys, you want to think about this also. What is your risk level? This is the next big question that you have to ask yourself. How risky of an investor are you going to be? Some people will go into the investment game really aggressive. Some people will go into this thing really conservative. Some people, maybe like myself from time to time, will try to operate somewhere in between. So you got to ask yourself before you get started, what is my risk level in terms of investing? When I'm asking, what is your risk level? What I'm really asking you is, how much money are you willing to lose whenever you make your investment? Are you willing to go big and lose it all? Or when you put money into an account, you want it to stay there? That's your risk level in investing. Now, when it comes to aggressive risk, this is high risk, high reward. This type of investment strategy works best for young folks who have nothing to lose. So, say that you're just getting started, maybe you just graduated from college and you don't have a lot of money, but you're trying to take a little money and turn it into something. That's an aggressive investment. Now, maybe for people that are older, that already have money in the bank and you're just trying to preserve it for your retirement, you may want to invest a little bit more conservative. This is an approach that is low risk, low reward. This is for those of y'all that you're ready to pee in your pants every time you see the stock market going down. This is for those of y'all that's ready to cuss somebody out every time the stock that your family or friend recommended went down. Conservative investments are for people who have money and are trying to protect it. Okay. You're not looking for a ton of return on your investment, but you want to be able to make just a little bit more. Okay. You got to be able to know what your risk level is before you even start investing. Because imagine you being a risky investor and you want to make aggressive investments, but then somebody recommends that you get into a bond. On the flip side, imagine that you're somebody that doesn't want to take any losses, but now people are telling you to invest in crypto. You got to know what to do. So right now, I'm going to share with y'all a really nice infographic that I came across. Shout out to Ross M. I want to show you guys an investing fundamental infographic that really breaks down the types of investments that you want to consider based upon your investment strategy. Okay. So, for those of you guys that are low risk investors, these are the types of funds that you'll want to consider. You have obviously bank and savings accounts, right? Like your emergency funds. This is where you're not going to hardly make any money, but you have a safe place where your funds are insured. Next, you have property through real estate. Now, again, you might get some pretty steady growth on any investment property. Okay. And this is where, depending upon what type of property you end up buying, you can either have a low return or a high return. It depends on your location, it depends on the market. Also, this may help to lower your risk. Then you have ETFs. This is what's known as exchange trading funds. Okay, I want y'all to ask me questions during this broadcast. I don't want this to be a monologue. I don't want this to just be somewhere y'all like this in the comments section. It's just a bunch of crickets. I want y'all to really be involved on this broadcast because I'm putting this content out there for you. And if y'all love what we're going into and you're getting a lot of value thus far, please make sure that y'all sponsor this platform to keep the show going. All you got to do is tap the dollar icon directly below the live chat box so that way you can donate. All right. Pay y'all's tuition. That's a super chat. And whenever y'all put a super chat on the screen, I'll be sure to check out the comments and be able to shout y'all out. One of y'all might have already did it. I'm going to look at the comment section as soon as I get off the screen. Okay, ETFs stand for exchange traded funds. These are things like your mutual funds, your index funds, the things that I talk about regularly on this show. Okay. The reason why ETFs provide less risk than an individual share is because you're able to diversify into multiple companies rather than just one. When you're investing, you don't want to put all of your eggs in one basket. So when you invest into a fund, that makes sure that you're able to leverage all of the different top performing companies within an industry. Okay, I always tell you guys, I'm an investor into different index funds. I invest into the S&P 500, which means I invest into the top 500 companies on the stock exchange. I couldn't invest into each company one by one, but ETFs allow me to do it easily and more affordably. Okay. Then shares become more risky. When you start getting into just individual companies like investing in Walmart or investing in Apple, you're exposed to more risk. And then when you start investing into penny stocks in cryptocurrency, this is where your money gets extremely volatile. I did a broadcast on here last week where I was telling you guys about how at the start of the month, I had $3,000 in crypto. And then last week, during the time of the broadcast, that went down to $2,300. I had lost $700 in the course of 1 month because the crypto markets are very volatile. I can make money or I can lose a lot more money. Okay. So you really need to think through this chart as you consider what your risk profile is. All of you guys have a different level of risk. Some of y'all are willing to bet it all. That's why y'all have gotten into crypto. Some of y'all are not trying to lose anything. That's the reason why you're getting into money market accounts, CDs, which means certificate of deposits. Some of you guys may get bonds, invest in real estate. Your risk profile determines your strategy. Okay, let me start checking these comments to make sure y'all with me. Okay, shout out to the brother Andre. The brother Andre is on. He says, let's see what keys to success you're handing out today. Seems like every time and then the comment cut off. But just know the keys are coming out, y'all. Y'all are getting some major keys on tonight's broadcast. So just make sure that y'all tap in. Okay. Make sure that y'all smash that like button. Tonight, we're talking about Investing 101, a step-by-step guide to get started. Now, the next thing that y'all got to focus on is where you're going to make your mark. Remember, I told you, we're going through the who, what, when, where, why, how model. You need to identify where you're going to make your mark in the investment game. See, you want to be an intelligent investor, not a gambler. So you want to know where your money is going. You want to figure out what you understand the most, so that way you can leverage your knowledge within the market. I know a lot about technology. I graduated with a degree in IT. So with my degree, all of my experience, my time that I had in corporate America, I focus on tech investments. I am invested in dozens of different technology companies around the world because I understand what these different companies provide to the marketplace. Okay, I'm invested in companies like Zoom. I'm invested in companies like Facebook, which is now running the Meta universe. I'm invested in all of these different tech stocks because I can understand where the market is going. If you know nothing about a fund, it's not wise to invest in it, because how will you know when to buy or sell? How will you ever know how this investment is really going to work for you if all you're doing is just going off of something that somebody else said? That's the reason why you want to research before you invest. What I do is I will look at the news. I will study successful investors. I'll start looking at trade reports. I will look into different industries as well as different businesses. Okay. So when we talk about this research component, guys, this is going to be really heavy because this will dictate your investment strategy also. Some of you guys, you don't want to be hands on with this process. And that's the reason why it would be better for you to get into an ETF rather than an individual share. But there's other of you guys that are out there that, like you are really into this stuff. You are really into a particular industry. You're always watching what this company is doing and what that company is doing. You've done your homework. Maybe you want to be more of a full-time investor. So maybe you might be a little bit more focused on individual stocks, options. You might be a little bit more involved in the game. This is the reason why I'm always telling you guys to answer these questions before you get started, because if you randomly start investing into all of these different funds, but you've never asked yourself how you want to design your life, you could easily be setting yourself up for failure. Imagine you take advice from somebody that's a day trader, but you never want to look at your accounts at all. If you follow that person's advice, there's a good chance that you're going to lose a lot of money, because in the same time where this person is putting money in and pulling money out, whenever those stocks that the other person pulled money out of is going down, your money is going down with it. And then you go to the person and be like, man, why you tell me to put my money into this account? I done lost all my money. They're looking at you like, that's shame on you, fool. I told you I do this day by day. I'm a day trader. I'm not investing my money the same way as you are. That's the reason why I'm getting different results. Okay. I need y'all to focus on this if y'all are going to level up. You need to be very honest with yourself on what is your investing strategy, what is your risk profile, how are you going to make your mark in this industry. When I'm answering these questions, when it comes to me, I'm focused on the long-term goal of creating generational wealth. I don't need a lot of money right in the here and now from the investment game, okay? Because I have multiple streams of income that can do that for me. But when I invest into things, I want to know that I can pass this down to future generations. I am a fairly aggressive investor. So I'm willing to put my money into risky things, knowing that I can take a loss. I'm willing to put money into crypto. I'm willing to put money in stocks. I'm willing to put money into real estate, but I'm also willing to research all of these different areas. Ariel will tell you, when I'm involved into investment trading, okay, I will study the market day and night. When I'm focused on doing my tech investing, guys, I might spend literally the whole day just looking through different investments. And then I'll spend the next morning actually investing, putting my money towards certain things. See, that's what I do. In terms of where I'm going to make my mark, I intend to make my mark through tech investing in the long run and real estate right now. I'm very clear on what it is that I want to accomplish within my life. And that's what helps me be successful at investing. If I approached investments from the perspective of, well, which one of my friends told me to invest in this, I would be all over the place, because investing strategies change by the day. 1 minute, people are telling you to invest in crypto. 1 minute, people are telling you to invest in gold. 1 minute, people are talking about Forex, real estate, all these different things. If you don't know for yourself the investor that you want to be, there's no way that you're going to be really successful. Listen to what I'm saying, guys. If you don't have a plan for your own life, how can you reach your highest levels of success? Because there's no way that you're going to do an effective job just being a second class version of somebody else. I can't be the second class version of Warren Buffett because I know a lot more about tech than Buffett does. Buffett will go out on a news station and say, I don't know that much about technology. So why would I follow after him if he knows more about other industries that are not my strength? I got to take what my strengths are and invest in that. And that's how y'all got to really play this game. And listen, guys, there may be certain things that y'all don't know about. But just because you don't know about it doesn't mean that that's an excuse to never learn. You know, I'm constantly teaching myself about new industries by the day, because I'm seeing how tech is interacting with these different industries. So I've got to know a little bit about how these other industries operate just to be able to do better tech investing. Let me start looking through some of these comments, y'all. Where these super chats at? Y'all are real quiet tonight. It's just like last night. Listen, y'all got to go back and watch last night's show, man. Last night's show was crazy. I was on the show for the longest time, just talking and talking and talking. And then, like an hour into the show, super chats started coming. And lo and behold, y'all, LA for Life and Rodney Lawrence got into a super chat war. No cap. Yo, y'all got to go back and watch that broadcast, man. It was crazy. Juice, Yasha Allah, Akita Monet, listen, they was on your head last night, man. I'm telling you, just go back and watch the show for that alone. But y'all, if y'all are getting a lot of value and you are really soaking up game on this broadcast, please donate to your boy to keep this show going. All right. I give you my time, my energy, my labor of love. Even if you don't like using Super Chat, you could still use Cash App or PayPal. The links are in the description below. Ariel said she's getting a lot of value in this show. See, I think it's important that y'all understand that the reason why I'll have Ariel tune into these broadcasts is so that way she can soak up a lot of the game so that she could continue to manage all of this after I'm gone. You know, God forbid I'm gone anytime soon. I would love to be here for many years to come, if it be the Lord's will. But this is really a process to help build generational wealth where you can sit your family down and you could show them, this is how you invest in this. This is how you invest in that. Okay. All of us put our time towards things, but how many of us are investing our time in putting our community first? Okay. So now you got to figure out where you're going to make your mark. I'm a tech investor. Y'all might be into something else. What works for you? Like I said, for those of you guys that are really trying to make your mark in something, look at the news. You got to see, okay, what is in the headlines about where your industry is going? Are they on the rise? Are they going down? You got to study it. You got to study successful investors. Guys, you will not be successful in investing just by randomly going on an investing website and just throwing money anywhere. You have to follow success. Okay. That's how success is created. Success leaves clues. You got to follow them. And then you have to start modeling the habits of successful people. So even though I may not have the same investing strategy as Warren Buffett, I will take certain parts of his game outside of the industry. I may apply something from Buffett like buy and hold. I will take heed to what he says about how average investors should not focus on individual stocks, but rather ETFs. I'm studying what do the guys that have really succeeded in life done, because I know if I model what they do, then success will follow me. Okay. Study the greats and become greater. You want to watch the news. You want to watch successful investors. You want to start looking at trade reports to figure out which stocks are on the rise. Y'all don't have enough time to figure all of this out on your own. So this is the reason why I will, you'll see different advertisements from things like Motley Fool and others. Shout out to Motley Fool. Y'all know y'all need to be sponsoring me for plugging y'all right now. Y'all need to be looking at these different trade reports because they will summarize where the market is going. Okay. Also, when you look into certain investments, you want to study the industry as well as specific businesses. So I won't just study energy, I'll study Tesla. I won't just study tech, I'll study Amazon. I'm looking at both the general direction of any one industry, and then I zoom in on specific businesses within that industry to see if they are going to be industry leaders for years to come. Okay. So if I know, hey, the tech industry is going to be on the rise, I'm going to ask myself which companies are going to lead the pack. If I know, there's certain biotech companies that are going to take off, I'm going to study which advancements in medicine that certain biotech companies are making to say, okay, well, you know what? When it comes to this latest research, this is going to be the biotech company that's going to lead the way on this cure. Okay, that's how you guys got to do it. But again, when you just start off with investing, I recommend you start off with the fundamentals versus going advanced. Even though I, after years of investing, also invest in certain individual stocks, a lot of my family's money is tied into both mutual funds and index funds over time. Now, let me be clear on what I'm saying. When I first got into this game, guys, I had all of my money for the most part in mutual funds. Over the past few years, I started transferring money out of the mutual funds into index funds. And the reason why I did that was because of fees. You guys got to understand that it's not just about throwing money into something. It's about making sure that the money goes towards a specific kind of account that lowers your tax burden as well as your expense ratio. But we'll break down maybe more advanced stuff on the Patreon whenever I set that up. Y'all, I also have a program that talks a lot more about this called 0 to 6 figures. For those of y'all that want to go deeper on this, y'all really got to check that out. Okay, I'm going to give y'all some more information at the end of tonight's broadcast. But for now, let's just stay where we're at. In any arena, there are fundamentals and then there are advanced steps. When you invest in things like stocks, that's a little bit more advanced when you take the individual route. I recommend for those of you that are just getting, in the game, you're just getting your feet wet, start looking into some of the best index funds that are on the market because you don't have to constantly manage it. You don't have to constantly buy and sell. Index funds like the S&P 500 have had a track record of having a high ROI over the years. And so without knowing everything under the sun about a bunch of different companies, just start to put your money in easy places. Now, LA for Life is on. Shout out to LA for Life, y'all. Listen, y'all, LA for Life, she really, really, really held it down for the audience yesterday, man. And I just can't say enough. LA for Life was yesterday's top sponsor. She was the official sponsor. She'll make sure y'all show us some love, y'all. We need some sponsorship for tonight's broadcast, though. Okay, I think LA for Life and Rodney and everybody else that was on, they were so busy emptying out all of their sponsorship money on last night's broadcast. they're waiting to see who's going to be the sponsors for tonight's show. All right. So for those of y'all that are on tonight's show, let's get a super chat going. All you got to do is tap the dollar icon directly below, or you could do Cash App or PayPal. Links are in the description below. Listen, for those of y'all that want to cam up, let's get that going too. For those of y'all that have questions, leave your questions in the comments section. I'll help you out. If you're looking for step-by-step help during this broadcast for free, cam up. Okay. Y'all know I also do one-on-one consultations. I'll put a link out for that. I know some of y'all may not want to put all of y'all's personal business out or all of y'all thoughts. Some of y'all might feel embarrassed. So I'll put out a link for you guys to be able to work with me one-on-one for an hour, and I can help you further. Okay. Tonight, we're talking about Investing 101, a step-by-step guide to getting started. When you're getting started making your investments, you got to ask yourself, why are you investing? What matters in your investment strategy? How risky are you? Where are you going to make your mark? And when do you want to invest in certain things? This is the fifth point. If you're going to be successful at investing long term, you need to understand when you're going to make your investments. Now, when I talk about when you're going to make your investment, guys, I'm not talking about timing the market. Timing the market is an investment concept that means you know exactly when you can put money into something and then it's going to shoot up. Nobody can time the market like that. Okay. People act like they can time the market, but it's all very speculative. Nobody knows where the market is going to go. If people knew where the market was going to go like that, everybody would have had their money pulled out during the recession. Everybody would have pulled their money out during a dot-com bubble. Everybody would have pulled their money out during the housing crisis. We don't know where the market is going. However, we can have our own predictions through research to make sound investments. Okay. So you really need to know when it comes to all of the different kinds of investments that you can make, you got to ask yourself when you want to invest in certain things. So, for example, for those of you guys that may not have any investments at all and you're working at a 9-to-5 job, I would highly recommend that you start off by investing into your 401k. I recommend that you start off with your 401k versus any other investment because your 401k is backed behind a company match in most cases. Go to your job tomorrow. Ask the HR department, do you guys provide a company match? If they provide a company match, but you're not invested, you are leaving money on the table. I want y'all to think about this. Some of you guys could be making $100 per investment just by putting in $50. Because if you have a company that's willing to match your $50 investment, for every $50 you put in, they'll put in another $50. So that 50 turns into $100 every investment. This is before you actually get returns from the marketplace. Okay. Before any stocks go up. Okay. And all you do is just put money in. The company that you work for is willing to match you up to a certain dollar amount. So why wouldn't you start investing? That is by far the best way that you can make money in your portfolio. Get into your company match. Okay. Now, I know that there's some companies that may not do company matching at all. This is the reason why I also talk about the IRA. I strongly suggest that you guys get started by building on your tax deferred investment accounts. A lot of you guys want to get into things like crypto and all this other stuff, and that's cool. But what I'm saying is, if you are throwing all kind of wild money into crypto, but you don't have any money into a tax deferred account, you're gambling. And you may not even understand like how much money you could be making over time. The reason why people get wealthy through these different retirement accounts is because they will give you the best tax benefits. When you get into something like a Roth 401k, for example, that means that whenever you put money into the stock market, you're going to pay your taxes up front so that when you walk away with all of your money at retirement, you take that money out tax free. You don't have to pay any other taxes at that point. That's the type of investing that you guys need to make. But if you get into a non-retirement brokerage account, you're going to be paying taxes on that money each year. You're going to be paying taxes on whenever you do a sell. You're going to be doing taxes on capital gains. You're going to be a lot more taxed whenever you see. This is rich white people talk. I had to throw that out there because a lot of y'all, you wonder, whoa, what is Uzziah talking about? Make it make sense. It's like you're speaking Chinese. This type of talk that I'm talking right now is really Trump talk. This is blue blood talk. To a lot of y'all, you're like, yo, I'm not trying to hear this. I'm just trying to put my money somewhere. But trust me, bro, over the long run, you will wish that you would apply what I'm saying. Two people could have the same amount of money invested into an account. But if one person has one money into a retirement account and another person has a money in a non-retirement account, the person in the retirement account, depending upon when they pull that money out, is going to walk away with a lot more money. If two people have their money in a retirement account, one person has their money in a mutual fund, one person has their money in an index fund. All other things are the same. When you pull the money out, the person on the index is going to make more money because a mutual fund is an active traded fund that requires more fees. But a lot of us will just hear things and we'll say, oh, okay, I'm going to put my money there. But we don't do the right research on how much is this going to cost me in taxes? How much is this going to cost me in fees? What are the penalties that I'll be charged if I take this money out too early? This is the reason why I ask y'all, what kind of investments do you want to make? Because if you don't understand what money that you need and when, you're going to incur a lot of penalties along the way. Okay. We all need short-term and long-term money. That's what we're going to talk about on tomorrow's broadcast. Tomorrow, we're going to talk about why you'll never be able to retire. Y'all need to be tapped in on tonight's broadcast. Real talk. Tomorrow's broadcast. Tomorrow is going to be a scary, but a very important broadcast on why most people will never be able to retire. I'm going to save it for tomorrow. Y'all just tune in. Now, shout out to my brother, Rodney Lawrence, y'all. I told y'all last night, you see, Rodney ain't the brother that's going to put in buku money on any one broadcast. Last night, he was putting dough up. Shout out to the brother, Rodney Lawrence. Last night, the brother was putting dough up. But Rodney, Ariel, Yasha Allah, they're the type of sponsors that every show that they're on, sponsorship. And I definitely appreciate y'all for what y'all bring to this broadcast, man. Much love to you as always, my brother. Thank you for your sponsorship. You know what's so crazy, Rodney? And I hope I don't take the wind out your sails after saying this, because you know it gets competitive. The brother Rodney, he might not have gotten the official sponsor for the $150 super chat that he put up yesterday. But the way that things is going tonight with no sponsorships, the brother might come up off a $5 super chat. The brother might be the official sponsor off of a $5 donation. So let's see if that's going to be the case, y'all. Is anybody else going to sponsor tonight's broadcast? Y'all been like this when it came to these donations, man. If you love the show, if you love where the broadcast is going, then please donate, y'all. Please, please. Oh, see, here we go. Here we go. You listen, LA for life. You ain't right. LA for life. Yet again said, I'm telling y'all, man. We're gonna have to have a show, man. Get your boxing gloves. Get your. Yo, we on another broadcast where it's Rodney and it's LA for life just going head to head on the official sponsor show. Right now, LA for life is at the official sponsor level once again. My brother Rodney Lawrence is in second place. Thank you so much for all of the sponsorships, y'all. Really appreciate it, man. Much love to y'all. Thank you so much. Listen, if anybody out there wants to take the crown from LA Life, man, y'all put up a $15 super chat. LA for Life. Y'all can't let LA for Life get the official sponsor slot 2 days in a row, y'all. Come on. Let's make sure that we donate to the broadcast. Back to where we're at, okay? For those of y'all that are just joining, welcome. Smash the like button. Tonight we're talking about investing 101, okay? You need to make sure that you know when you want to invest in certain things, okay? So, for example, I recommend you start off with your 401k and then add other things to your portfolio from there. You may want to focus on first building up your tax deferred investments like your 401k and your IRA. Then start putting money towards your make your mark investments on whatever that may be, whether it's crypto, real estate, gold, silver, whatever. And then have your play stuff. This is money that you don't expect for it to really go anywhere, but you're just throwing it as something just in the off chance that it takes off. Okay. So I wish that I would have had some play money in Bitcoin back in the day. I wish that I would have had play money, in certain other tech stocks. Not that I'm betting the house on it, but just to throw a few dollars there to say, if this ever does go somewhere, I'll be on the money train. You gotta first order your financial house, though. A lot of y'all be following after the hype of play money as though that's going to be your long-term investment. No, you need to first start off with where the real money needs to go. Put that real money towards your long-term generational wealth plan, which should come through tax deferred retirement investments. And then after that, you can put money into your make your mark accounts and then a little bit of play money from there. So for me, what this looked like was I first started off with an IRA before I even had a job. In college, I opened up a IRA account. Okay. One of my fraternity brothers from college, he was just getting started as an investment advisor, and I was supporting him by getting a IRA that he had established. Okay. So from there, I had an IRA in college. Once I graduated from college, I then opened up a 401k through my job. Okay. It came with the benefits. I started putting money into the 401k. Then I also invested in a what I needed fund. Okay. This is a little bit extra. I started investing into real estate not because I wanted to be this big time real estate investor, but I needed a place to stay anyway. So I said to myself, well, why wouldn't I invest in something that, will make me money? And it's a place where I can hang my head at too. And that's how I ended up getting a duplex. I got a duplex in my mid 20s, all because I needed my money to go somewhere after having paid off my 95,000 in student loans. And because I knew I couldn't, get wealthy just putting it into my savings account, I started learning about real estate. And then I ended up getting a duplex in North Austin because, I didn't have any kids at the time. It was just me and my wife. So I said, hey, we're just going to stay here for a few years. And then over time, we'll be able to get somewhere else. And that's exactly what we've done. Okay. So I went from tax deferred retirement accounts to the what I needed account, real estate, then to the make your mark account, which was tech investing. And then I started to dabble into play stuff. That's crypto. Now, the next major thing from here for me will be making lifestyle investments. These are appreciating assets that are, nice little luxury items to have that will make more money over time. This includes things like cars that appreciate, watches that appreciate, like Rolexes and other things, vacation homes, and more. See, you don't have to buy like all this random stuff and it becomes a liability. You can actually buy certain lifestyle things and they become assets. Okay. I know a brother right now that bought himself a Benz and he started putting it off on Turo, just renting it out just so he could turn a depreciating asset into a money maker. Okay. These are all different things that you could do. But like I said, this is kind of my playbook. I'm not saying that has to be yours. I went from tax deferred to what I needed to making my mark to play money. And my next form of investing after this will be lifestyle investments. I'll, if I buy another car, like a level up car, right? I want a get around car also. But if I get a level up car, I'll make sure that that car is a car that appreciates in value and not depreciates. Okay. And I can leverage my existing investments to pay for that. I won't have to take out, I won't have to use any of my new income to do it. I could take out the money that I already have to be able to do that. But again, that's for another talk. Okay. I could, everything that I want for myself, lifestyle related, that will come after all of the other investments that I've made. But I would have never been in a position, y'all, to be able to have play money or lifestyle investments had I not made the wise decisions at first, getting into tax deferred accounts, getting into, the things that was based upon my need, which was investing in real estate. Had I not made those moves, I would never be in a position to talk about my next move is going to be on, what kind of Ferrari is going to appreciate just as an investment, not even a drive like that. I could never have that talk if I didn't do the fundamentals first. Okay. So as we get ready to close this thing out, y'all, and shout out to Rodney Lawrence. We're getting back to that. We're getting back to that, y'all. I see what time it is tonight. I see what time it is. They still on cloud nine from yesterday, man. Shout out to our official sponsor for tonight's broadcast thus far, Rodney Lawrence, leading the way. He's got an $11 top total racked up, y'all. He asked, what is an index fund? An index fund represents the index of an entire industry into one investment fund. So, for example, when I keep talking about the S&P 500, the S&P 500 index represents the top 500 largest companies on the stock exchange. Okay, so when you want to invest in all of the big companies, Apple, Google, Microsoft, Tesla, Walmart, you get all of that in the S&P 500. The reason why the index funds are around is because it gives you a large variety of different individual stocks all rolled into one fund. So that way you don't have to pay for it individually, right? So if you could imagine, Rodney, let's say that you legitimately wanted to buy the top 500 stocks, right? It would take you a lot of money to individually buy those top 500 companies, buy shares from them one by one. It would take you a lot of money and it would take you a lot of time. So what companies like Vanguard and Fidelity have done is they've opened up different ETFs like the S&P 500. And the S&P 500 will take all of the top 500 companies and they will give you portions of every last one rolled into an index fund. Okay. There are tech index funds, there are medical industry index funds, and index funds is just a index of all the industry rolled into one fund. And the reason why it's so effective is because, if you are really invested into where an industry is going rather than one company, you can have a very solid return because instead of putting all of your money into one basket through one company, you can invest in the industry itself. So as the industry elevates, your money elevates along with it. Okay. I really, really recommend that y'all check that out because when you start investing in individual funds, individual shares, that's going to give a lot more risk to your money. And you'll have to be a lot busier monitoring each stock one by one, pulling money out, buying and selling. This is a lot less work for you over time. A lot of people like myself will just buy an index fund and just hold on to it for the rest of our lives. We just set it and forget it. The rest of people who's, doing all these other complicated things, you're going to have to monitor that a lot more closely. Okay. So that is what an index fund is. Now, when we talked about how to invest, okay, this is going to be one of the last things that we cover, y'all. I'm about to get out of here. When we talk about how to invest, remember the when, what, where, why, how. You have to know how to invest. If you're looking to invest in stocks or crypto, you need what is called a brokerage account. You need to be able to open up an account with one of the major brokerages like Fidelity, like Schwab, like TD Ameritrade or Vanguard. That's where you can do your investing. And that's in the stock market. Okay. Crypto, you can use Webull. I always give you all the link every broadcast. You can use Coinbase, Kraken. There's different accounts, Robinhood. There's so many different, accounts that you can set up through different brokerage firms where they will offer you, different crypto investments. Now, let me just plug this right now since it just makes sense. The reason why I always share with you guys these Webull stocks is because Webull is one of the only companies that allows you to invest in stocks and crypto all in one account. Okay. So for those of you guys that go through traditional investors, you would have to open up an account with somebody totally different to invest in stocks versus where you would have to go to invest in cryptocurrency. Like if you use Coinbase, you're not going to be able to just buy up a lot of stocks there. You're going to have to go to another brokerage to get stocks alone. Okay. So Webull is really nice because it allows you to buy stocks and crypto all in one investment account. For those of y'all that are interested, click the link in the comments below. As soon as you open up your account, you'll get 2 free stocks. Okay. So yeah, y'all, if you're looking to invest in stocks and crypto, get you a brokerage account. For those of you guys that are looking to invest into things like real estate, you need to start studying the different forms of real estate funding. For me, I always go through traditional bank and I always go through a real estate agent. There are my brother, he does, real estate investing and he has a totally different setup. So you got to know like what type of strategy you want to have for real estate investing. For those of you guys that want to know more, check out the shows that I've done about how to invest in real estate. If I were to go through all those details, y'all would be on here for the next 2 hours. So just understand there's different kinds of real estate funding strategies, whether you're talking about, again, buying and holding, wholesaling. Some of you guys might be into flips. Whatever your strategy is, that will determine how you go about starting your investment. As we close this out, the last important thing I'm going to tell y'all is this. Diversify your portfolio. Okay. The key to success in your long-term investments is to diversify your investments, not having all of your eggs in one basket. If you had 100% of your money into the housing market, when the housing market crashed, you lost. If you had 100% in the stock market, when the stock market crashed, you lost. I'm talking about around during the time of Enron and all of that, around the 2008 era also. A lot of people had a lot of their money locked into retirement accounts only, and then they couldn't retire because of the hit that went into the stock market. Okay. You got to be diversified in where your money is going. And I'm also going to talk a little bit more about that, because it wasn't just because of the market that a lot of people lost their money during the stock market crash. It was also because of how they had their money allocated within the stock market. I'm about to touch on that for just a second. Okay. But you need to make sure that you diversify your portfolio. Diversifying your portfolio means if you're in your 30s, you might decide to, go with something like 90% stocks, 5% bonds, 5% crypto, or you might invest to take, 100% of your money and invest 70% in the stocks, 20% into real estate, 10% into crypto. Like, you got to figure out, of all of the money that you're going to put towards your investing, what percentages are going to go to different places. Okay. For me, I'm a fairly heavy real estate investor. Then stocks come next. I don't have too much money in bonds, only a little bit. And I'm getting myself more invested into crypto month by month. Okay. But I'm still not betting the house on all this crypto stuff. I still got a lot of money locked into real estate. And then right after that is stocks. Okay. So and one little basic rule, even for those of y'all that are on not into percentages, think about dollar figures. I have hundreds of thousands of dollars in real estate. I have tens of thousands of dollars in stocks. I have thousands into crypto. So that might be another level for you in terms of how much money I'm willing to invest. I'm willing to invest hundreds of thousands in real estate. I'm willing to invest tens of thousands for now into real estate. But see, it's all going to change. It's going to, Lord bless me over time. My investment portfolio will then shift into million in real estate, hundreds of thousands into stocks, tens of thousands into crypto, but that's over time. So you want to think about your investment like a staircase. I'm just giving you guys different methods. Okay. So guys, give this some thought. Identify what you want your portfolio to look like. Do your homework, okay? And really go in on this, y'all, if you're going to invest, because what matters more than the asset itself is how you do your asset allocation. Asset allocation is how much money you put into each thing, okay? And when you invest your money across the board in the right places, then you can definitely see some returns, okay? So shout out to y'all for all of y'all's support and love. Really appreciate y'all for tonight's broadcast. Looks like LA for Life is going to let Rodney have this one, okay? Thank you, LA for Life. Rodney Lawrence said, shout out to Rodney, by the way, for that next $5 super chat. The brother Rodney Lawrence asks, how do you suggest we reinvest profits pulled from crypto? That really depends on your risk profile. Like I said, if you are an aggressive investor, you may decide that you want to take some of your profits from your crypto fund and continue to reinvest it into other crypto funds or your existing crypto. You may also be a little bit more conservative, and you might, say, hey, man, this crypto stuff is very kind of come and go. I don't know about this. I'm going to take some of these funds and I'm going to put it into the stock market. One of the big things that I really recommend for you guys is that you. Sorry, I was just looking at Atara's comment. One of the things that I really recommend for a lot of you guys um, is that you set up your wealth creation through a business, and then you take profits from the business and you invest it into the different markets. There are a lot of you guys that are looking to create wealth in the markets. However, the markets are a lot of times best at growing wealth that's already there. Okay. So when you look at people that are in the top 1%, the top 1% will make a lot of money through their business assets, and they'll take those profits and then they'll start buying up real estate. They'll start buying up stocks. They'll start buying up different crypto funds, but they may not start from the bottom in those places. Okay. Generate your money from your business and then take a portion from that business money into your stocks or other investment markets, knowing that that may not be around forever. Now, Atara, welcome. I don't know how long you've been on tonight's broadcast, but a little bit earlier, one of the things that I was talking about was knowing when you want to invest in certain things. For people that are just getting started, my recommendation is that you start off with a 401k. If you are working at a 9-to-5 job, if you're a husband or working a job right now, start at your 401k, because that'll allow you to get invested in a company match. Company match says for whatever amount of money that you invest up to a certain amount, the company is willing to match it. So if you invest $100 a month, your company may be willing to invest another $100 for you. So now you have $200 to your name rather than 100. Okay. And then when you get certain returns from the markets, you're going to get a return on that investment based upon $200 put in rather than your initial 100. You want to start off with tax deferred investments. Okay. Then you want to add other things to your portfolio from there. But like I said, guys, go back and watch the beginning of this broadcast, because I really laid it all out step by step. Okay. If you guys ever have any questions about getting started with investing, watch this video over, guys, from start to finish. Okay. This is honestly, this is the most extensive, well laid out step-by-step guide to investing that I've ever seen on YouTube, because I've seen a lot of guys talk about, just general things, but you'll know how to do like everything that you want by watching this video, whether that means you're day trading, whether that means you're buying and holding, whether that means you're buying and selling, whether that means you're doing options. Just watch the video from the start and it's going to lay it all out. Okay, Atara? Thank you so much for joining. All right, y'all. We have had quite the broadcast, and it looks like Rodney Lawrence is going to be the official sponsor. I'm not sure on that. If any of y'all want to throw a donation in the hat, now is the time. Okay. This is the final call to see who's going to be the official sponsor for the Investing 101 broadcast. If you want to be the official sponsor to have your name by tonight's broadcast as the premier shout out, then y'all got to donate. Okay. Right now, Rodney is leading the way with a $16 sponsorship. So anybody that put up $20, they take the crown. But as of right now, Rodney is leading the way. So thank you so much to everybody who donated. Thank you so much for all the super chats that keeps us going. Shout out to my brother Rodney Lawrence for that $5 super chat. Then made a $6 super chat. Every time the brother had a question, he was putting his money where his mouth is. I respect that. Thank you, my brother. LA for Life came through with another one. Shout out to LA for Life for the $10 sponsorship. And then Rodney came through with yet another $5 sponsorship, y'all. So listen, if you're going to donate to tonight's broadcast, now is the time. Okay, please tap the dollar icon directly below the live chat box. And as soon as you do so, You'll be able to enter in the amount that you want to give. $20 right now will make you the official sponsor. Okay. For those of y'all that like using Super Chat or Cash App, the information is on the screen and the links are in the description below. For any of you guys that want to work with me personally, okay, I'm going to give y'all a link for you to book a session. Okay. Some of y'all, you got things that you want to do for you and your family. You don't want to put all of your business out there. I get it. For those of y'all that want to be able to get with me for an hour privately, one-on-one, tap here to book a session. All you got to do is click the link and it'll show you which days and times are available on my calendar. And then just pick whatever time that works best for you and then go from there. All right, y'all. So listen, thank you so much to everybody that tapped in tonight. I think that tonight was a very important broadcast. Tomorrow I want to talk about retirement because I think that's going to be a real important thing. I think a lot of y'all not thinking about that too much because, a lot of y'all that watch this broadcast are very young, but I need to put some things into perspective. So make sure that y'all tune into tomorrow's broadcast. All right. Make sure that you smash that like button if you haven't done so already. Make sure that you subscribe and turn on the notification bell so that way you can receive an alert anytime I do another broadcast. Okay. And again, for those of y'all that love this channel and love what it's about, please make sure y'all donate, y'all, because that's what keeps the sponsorships going. I love y'all. I'll check y'all out for tomorrow night's broadcast. Until then, keep pushing. I'll see you at 7 p.m. tomorrow, Lord willing.